The role of artificial intelligence in modern finance. What changes are happening in the world of business right now because of AI? What if algorithms that are smarter than ever could affect the way you trade, bank, and make other financial decisions in the future? We're going to talk about the role of AI in modern finance and how it's changing everything from trades to personal finances in this video. AI in finance is expected to grow to be a $130 billion business by 2027. However, what does that actually mean, and why is that relevant? Finance has traditionally relied on data analysis to predict risks and rewards. The vast amounts of data in today's digital world hinder human analysis. AI helps find needles in financial data haystacks. From automating monotonous tasks to spotting complex patterns, AI is changing banking. Beyond human capabilities, it can analyze millions of data points, documents, and news articles to find insights. It could improve real-time risk assessment, forecasting, and other wise investment decisions. It's not just about money. When utilized effectively, AI in finance can boost loan and financial instrument access. AI may improve financial management in a complicated society, from Wall Street to community banks to family budgets. View our webinar on value creation with data in financial services. Finance teams can learn from Data Camp for Business. To meet your goals, we give substantial data, AI training tools, and performance analytics. Artificial intelligence AI systems may do human-like tasks like speech recognition, data interpretation, and decision-making. Finance is using AI to improve processes and uncover insights in banking, investing, insurance, and other fields. AI's machine learning (ML) subset lets computers learn from data without programming. Finance uses machine learning (ML) techniques including regression, random forests, and neural networks to automate processes and predict fraud, pricing, risks, and other variables. Deep learning (DL) uses multi-layered artificial neural networks. Depth enables learning from big datasets like financial transaction histories. DL advances chatbots, algorithmic trading, credit evaluation, and anti-money laundering. NLP aims to understand human languages. NLP is used in finance to analyze earnings calls, news, regulations, client inquiries, and other text to automate processes or get insights into risks, sentiment, legal compliance, and other issues. Computer vision lets computers understand any digital image or video. CVs are used in finance to conduct checks, monitor tangible assets, scan face expressions, and more to prevent fraud and gather information. Financial institutions can improve customer service by automating repetitive processes and discovering hidden trends with artificial intelligence (AI). Artificial intelligence is rapidly improving banking efficiency and cost. AI systems can automate manual tasks by analyzing enormous volumes of data, freeing up workers for higher value work. AI chatbots address many customer service questions about account balances, payments, etc. This greatly reduces response times and frees call center staff. Additionally, AI improves fraud detection and prevention. Machine learning models use financial data to analyze millions of transactions and spot tiny fraud trends faster and more accurately than human analysts. These methods help banks detect fraudulent transactions in real time and reduce fraud losses. Digital identity can reduce AI-based fraud by providing a layer of verification and ensuring only authorized users can access financial transactions and services. Credit decision-making is another key usage. AI algorithms can analyze credit risk using customer data like income and spending patterns. Data-based assessments are more accurate and fair than traditional methods. Banks are also using AI to recommend products based on customers' past transactions and spending habits. This improves conversion rates and customer satisfaction. By analyzing a customer's financial behavior and preferences, AI can offer the best CD rates for their savings goals. This guarantees buyers get the best deposit returns. AI is also changing risk management and compliance in finance. AI systems can handle massive volumes of data faster than humans, allowing them to spot dangers and fraud. ML applications in finance are important because machine learning models are good at processing complex datasets to improve risk assessments and financial evaluations. KYC checks and AML surveillance use AI. These systems can indicate questionable activity for further investigation by assessing client data, transaction patterns, and associations with potentially dangerous entities. This improves efficiency and reduces illicit money flow. AI-based surveillance can discover illegal trades to aid regulatory compliance. AI enables more advanced risk models and financial analysis. AI systems can uncover correlations in huge information that people cannot, improving predictive analytics, scenario planning, and risk assessments. This informs lending, insurance underwriting, investing, and other decisions. AI is improving digital financial transaction security in financial services, especially in decentralized finance, DeFi, which is growing rapidly. AI can audit smart contract code to discover faults and stop fraud. proving its importance in fighting complex financial crimes. AI has many benefits, yet prejudice, explainability, and moral issues remain. Human oversight and governance remain essential. The key is balancing human direction on company priorities, risk appetite, and ethics with AI technologies that boost speed, accuracy, and efficiency. They offer the best of both worlds. AI is enhancing operations and client experience in financial services. Operations are automated, more efficient, and cheaper using AI. RPA uses software bots to process loans and claims, two repetitive, high-volume tasks. This reduces human mistake and speeds up procedures. AI analyzes massive amounts of structured and unstructured data to find insights humans cannot. Banks utilize AI algorithms to quickly analyze news and market data and social media to make trading and investing decisions. Insurance companies employ AI to predict risk, detect fraud, and set premiums. Difficulties in using AI in finance. The highly regulated finance sector presents numerous logistical and compliance issues when deploying AI systems. In order to maintain data security, quality, and compliance with regulations, financial institutions need to handle AI initiatives with great care. Obtaining clean, representative data for AI model training is a major challenge. Financial organizations need to put in place very strong data governance procedures because models are only as good as the data that went into creating them. Nonetheless, a lot of banks have a disjointed, intricate data architecture that spans mainframe systems that are decades old. It will need work to connect and prepare these data for AI initiatives. Businesses must also make sure that private client information is appropriately anonymized and safeguarded. The financial laws that control everything from trade surveillance to credit judgments must be followed by AI systems. There is a significant overhead associated with keeping records and model and paperwork needed to prove compliance. Businesses must also have model risk management processes in place to keep an eye on the functioning of AI systems, identify biases, and control undesired model consequences. Costly computer and storage infrastructure is needed for AI tasks involving large data volumes and extensive model training. Although many financial organizations want to use cloud technology, adoption of the cloud is hampered by strict legal requirements around data protection and residency. Integrating contemporary AI techniques with antiquated IT systems may also present challenges for businesses. Handling AI-related regulatory expectations is also very difficult. AI-related laws and ethical standards are changing quickly. It is crucial but challenging to keep an eye on regulatory developments across countries and to maintain adaptable systems. Financial organizations can get beyond these obstacles with appropriate project scoping and governance. There are important ethical issues with AI integration in finance, especially with regard to bias and justice. Biases that are already present in training data may be unintentionally reinforced or even made worse by AI systems. An AI model trained on previous lending data, for instance, may continue to penalize specific demographic groups if the data displays biases against them. Financial institutions are using fairness-aware machine learning approaches to address these problems. By using these techniques, we want to prevent any particular group from being disproportionately affected by AI choices. Organizations are also implementing transparency policies and setting up ethical committees to improve the accountability and understandability of AI decision-making processes. The requirement of AI know-how in finance. This video has demonstrated the various potential and problems artificial intelligence brings to the banking sector. It is imperative that those operating in this field have the necessary skill set to handle the impending rapid changes. Data is a major tool used by financial organizations for market analysis, risk assessment, and decision-making. Professionals on your team may be able to find insights and automate procedures that improve accuracy and efficiency with the special tools that artificial intelligence AI can provide. Financial companies need to provide their staff with the data and AI expertise they need to be competitive. For this project, a data camp for business is the perfect partner. They provide specialized training programs that enable finance teams to become proficient in the skills and methods required to successfully use AI. Data camp offers tailored learning programs concentrated on critical AI and data competencies for finance, including fraud detection, algorithmic trading, and predictive modeling. Practical exercises and projects that guarantee your staff can put their abilities to use right away provide hands-on experience. Monitoring performance to match training to your strategic objectives. Having a well-trained workforce is not just advantageous, but necessary in an industry where data is a valuable asset. AI's role in finance. In the upcoming years, AI is expected to continue revolutionizing the finance sector, according to many experts. AI will probably be applied in a wide range of intricate ways to process automation, pattern and insight recognition, data analysis, and recommendation making. AI may develop to the point where it can execute complex trading strategies and make extremely accurate market predictions in the trading and finance industries. The companies might be able to maximize both profits and investments as a result. However, as AI becomes more involved in financial decision-making, proper oversight will be essential. Through data analysis, AI will assist banks in getting a deeper understanding of their clientele, enabling more individualized services. Although customer service and financial planning are currently handled by chatbots and robo-advisors, these technologies will evolve and begin to resemble human beings. Significant developments are also to be anticipated, such as the incorporation of AI-powered solutions into bank digital wallets. Complex AI systems will automate numerous human operations such as fraud detection and loan application evaluation. Human monitoring and governance, however, will always be essential. AI is also revolutionizing the regulation and assessment of financial risk. Alternative data can be analyzed by machine learning to identify threats or events that humans might overlook. As a result, AI might help regulators with their monitoring, yet accountability will greatly depend on the AI system's justification and openness. However, since hackers are already utilizing AI to take advantage of weaknesses, the finance sector needs to be extremely watchful. Ultimately, experts stress that although AI greatly improves efficiency, intelligence, and creativity, human interaction in finance is essential. We need hybrid intelligence systems, which integrate AI with human knowledge, morality, and feelings. This human-AI partnership is where finance is headed. The effect on workplace employment. The banking industry's adoption of AI is changing the nature of employment. Even though AI automates tedious and routine jobs, it also opens up new job prospects that call for highly skilled technical and analytical abilities. To create and manage AI systems, professionals with experience in machine learning and artificial intelligence are highly sought after. There is an increasing need for those with the ability to analyze and build models from complicated data. Positions tasked with guaranteeing moral AI activities are beginning to take center stage as AI ethics gain attention. As AI becomes increasingly adept at handling data-intensive activities, financial analysts are shifting their attention to making strategic decisions and deciphering insights produced by AI. More complicated client issues are handled by human representatives, while AI chatbots handle common questions. The workforce needs to be retrained and upskilled in order for workers to succeed in the new technological environment brought about by the shift to AI. If you're intrigued by the impact of AI on finance and want to stay ahead of the curve, don't forget to subscribe and hit the notification bell. There's plenty more to learn about the future of money.